transmission number 33. Transmission 33 with Coin Cadence. Hi, Coin Cadence. How's it going?
It's going great there. How you doing?
Great. Yeah, I wanted to talk to you about mining and transaction volume and peer-to-peer mining, and also this, big discussion going on about block size. And, on your site, coincadence.com, I noticed you had some really cool graphs that kind of help to explain what's going on with the network as far as transaction volume and other statistics. You also have a price index and a few other things. But today we're going to talk mostly about the mining aspect of it all. So I'm going to go to your screen share you've got going there and see what you've got. Okay, yeah, so peer-to-peer mining, P2P pool, I believe it's called.
P2 pool.
P2 pool, excuse me, P2 pool. What is the difference between mining on a P2 pool and mining on a, I guess, centralized, or there's a few other types of pools? For example, you could also point your miner at CEX or Slushes, or I don't know, is that a Disk one still around? There's
yeah, Discus Fish. They're still
right.
up.
Yeah, you could point it at Discus Fish. I don't believe any of those are P2 pools. They might have slightly different features, might have merged mining or not merged mining, etc. But they're not. They are centralized in some aspects. So can you just tell us in general what are some of the main differences?
Sure. Well, P2 pool currently is the only decentralized mining pool. So all the other mining pools involve centralization of some kind. And what that means is that any miner who wants to mine on P2 pool can go to GitHub, download the source code, install it on their machine, and have their own instance of P2 pool up and running locally. Also, if they choose to, there's lots of people, including us, that are out there that host public nodes where the public can just come in and mine. Most of them are 0% fee, so there's no additional fee. The sacrifice you make in doing that is that you have probably a higher latency to the pool than when you're using somebody else's pool than if you had your own pool locally. And in P2 pool, latency is very important. And latency is the time it takes the data packets to get from your miner to the P2 pool server that you're mining on. So it's, the ideal solution with P2 pool is to install it yourself. It's free, it's open source, and mine directly to your own P2 pool. But a lot of people, when they're getting started, want to try it out, and they'll mine on somebody else's node to get started, and then eventually, hopefully, switch over to their own node.
Okay, so with a centralized mining pool, there's some advantages too, because that's probably why some people use them. So what are the advantages of a centralized pool?
I don't mean to beat up on the centralized pools. They're all great guys. I know Slush personally. He runs a great pool. He actually started the first mining pool.
Yeah.
But, they're really, the only advantage of a centralized pool currently over P2 pool is that very small miners can receive more regular payments by mining on those pools. So a centralized pool will have less variance typically than P2 pool will.
Okay.
The way P2 pool works is that all of our hash rate gets combined together, and the scoring hash rate, your scoring shares in P2 pool, are divided up between all the miners that are currently mining that have active shares in the chain. So you're competing not only with the whole network, but with the other peers on P2 pool to get your shares in the chain for when the block is found, so you receive a reward.
Right. Okay. So let's, break down variance in a real simple way. That just means if there's less variance, it just means you get paid out more often.
Right.
So,
you get paid more frequently, but not necessarily more. In the few studies people have done, they've actually found out that P2 pool, edges out the other pools, by a small margin on actual Bitcoin mined for a given hash rate. But again, the variance is much higher. So we can go, 2 or 3 days without finding a block, and then we can have one day where we find, 5 or 6 blocks, and then, that's kind of a hallelujah day. Where the bigger pools, you have it more, your payments are more steady. But okay. Again, with P2 pool, you may not get a payment for a while, but when you do get one, it'll be a larger one.
All right. So everyone is hosting this together. Do you get any extra incentive for hosting this public one? I mean, so normally the centralized pool, they're going to take a small fee.
Right.
that's, because they're providing a service, so they want to make some money too, and so they, providing service, they take a fee for using them. So when a block is solved, then they get a little chunk of that. So what about P2P? How does that work?
So with P2 pool, it's really up to each node operator. So again, many nodes are 0% fees. Our Coin Cadence node is 0% fee. And there's two types of fees in P2 pool. One is to the original developer, who is Force Voigt, who unfortunately has not been very active in the last year and a half or so. So most people actually don't include the donation to the developer fee. But some nodes will charge a fee to the node operator, which you can see, go anywhere from 0%. There's some nodes out there that actually charge 100%. So it's important to check the node fee before you start mining on any given node. But again, the majority of them are 0% fee, and we run them to help support the decentralized network. The community that's around P2 Pool is a really strong and vibrant community, and they're a bunch of great people, and they all are fighting for decentralization and to keep things fair and trustless.
Okay, great. So you mentioned fair and trustless. So can you give us some examples of some shenanigans that might have happened on other mining pools that weren't fair, and where you would be better off with a trustless system?
Right. Well, there's the obvious cases of the cloud mining scenarios where, some people just packed up and vanished after they took everybody's money. But even with the traditional pool, and it's never actually been proven to have happened, and I suspect it probably hasn't. I think the guys running these pools are pretty good, but you still need to have trust in them. For example, if you were running a typical centralized pool, as the pool operator, it would be trivial and almost impossible to detect if you were just to skim, for example, 1% of the hash rate off the top of all the contributed hash rate. Again, very hard to detect, very hard to prove. I don't believe that anybody's actively doing that. But again, you have to put your trust in them. Where with P2 Pool, P2 Pool has a parallel blockchain called the share chain, which runs in unison with the Bitcoin blockchain. And the P2 Pool share chain, rather than storing coins or transactions, stores shares that miners have received. And that share chain is shared between all the nodes mining on the P2 Pool network. So in a sense, it's very much like Bitcoin, that a share is broadcast and it's accepted if it's valid, it's rejected if it's not. And then when P2 Pool finds a block, it's each and every individual miner gets paid directly from the generation transaction based on how many shares they have in the share chain. So there's no third party with P2 Pool that ever touches the miner's Bitcoin. They go directly to the miner from the generation transaction.
Okay, great. So as you know, but I think we need to go over again, the miners decide how many transactions go in a block. So there have been blocks with, one transaction or 3 transactions, and some blocks are full of transactions maximum. So, and you've got a graph for us. So I want to know, if I use P2 Pool, how does the P2 Pool decide how many transactions go in a block?
It's an excellent question. And again, it goes, because P2 Pool is decentralized, it depends on the node that the block is found on. So for example, with CoinCadence.com, if you're mining on CoinCadence and somebody on the CoinCadence node finds that block, then the transactions that are in CoinCadence node's Bitcoin memory pool are the ones that will be included in that block. And I can, you can tweak those through Bitcoin D by saying the maximum size of the block you're willing to build, by setting things like relay fees and minimum fees to actually accept a transaction into your transaction pool. So again, it depends on the node. And unfortunately, we have had a few blocks found recently that included 0 transactions by an anonymous miner on the pool. But typically, P2 Pool miners are again, in it to support the network, and the vast majority of us that are running nodes include as many transactions as we can in the blocks we find.
Okay, great. So can you show us some statistics about how many transactions go in each block over time?
Sure. I actually pulled this up on Blockchain Info just because they have some more live stats. So what this is what's known as the UTXO pool. It's the unconfirmed transaction pool. And you can watch it grow here. Right now we're at 2,100, give or take. And that number will continue to increase until a block is found. And when a block is found, however many of those transactions were included in that block, that number will reduce by that many. So, I've seen blocks. I was actually going to try to look this up, but our database crashed, so I couldn't. But I believe I've seen blocks that actually included, a little bit higher than 3,000 transactions. And that's about at the 1 megabyte mark. And again, it depends on the size of each transaction, but a 3,000 transaction block is about as high as I've seen. 2,000 transaction blocks are pretty common for the bigger pools, anywhere between 1 and 2,000. So you can see as these unconfirmed transactions build up, those are actually stored in the memory of any given Bitcoin node. So if you're running a full Bitcoin node, these transactions are in your memory pool as well. And as this list grows, it takes up more and more of your memory. And then as soon as a miner finds a block, it automatically reduces by the amount of transactions included in that block.
Right.
Does that make sense?
Yeah, that makes sense.
Okay. So
just a moment. So anyone watching, if you're, kind of getting lost or whatever, you can ask questions. You can ask on my Twitter at Bitcoin Potato. You can also use Google Hangouts to ask questions, the Q&A. So I'll be checking that. Also, if you're on Whale Club TeamSpeak, I'll also check that out for questions. So you can go there and ask questions too. And you can also post your questions in the comments. And after the video, we'll get to them if you're asking about a certain time. And it's also good if you can timestamp the video. Just put in the time, like 3 minutes 31 seconds. What about this? And then we can answer your question really well. So yeah, I get that. That is really interesting, actually. So what I want to go over is, what is the advantage of mining a block with no transactions? And what's the advantage of mining a block with 3,000 transactions? And why does that happen?
Right. So again, the advantage is a miner advantage, not in mining, but like miner isn't small. So when you have a block, when you have two mining pools that find a block at the same time and broadcast it, they're two different blocks. Only one of those blocks will be accepted by the network, and one will become an orphan. So you have what's called an orphan race. And it's really about how fast, whose block propagates faster throughout the majority of the Bitcoin network. So whichever block gains access to the memory pool of more nodes faster becomes the next block, and the other block becomes orphan. So if your block has 0 transactions, it's inherently smaller and will propagate throughout the network faster. Where if your block has, let's say, 3,000 transactions and is a full megabyte block, then that whole megabyte has to be transmitted and then verified before that block will become valid. So you're more likely to win an orphan race with a smaller block. The benefits of including more transactions are obviously the transaction fees, which are pretty small at this point, and I don't think a great deal of concern to most miners. But also including the transaction, if you don't include any transactions, you're not supporting Bitcoin. You basically wasted, 10 minutes, that 10-minute span of that next block being found on nothing happening and 0 transactions being processed. So typically, the more transactions you include, the healthier it is for the network. And again, you do get the transaction fees, but they're not substantial at this point.
All right. So what's the average transaction fee?
It's 0.0001 right now.
So okay, 0.001 times what, 1,000 still isn't much. So
yeah,
you're right.
It's not a huge amount compared to the 25 BTC block reward. We're mining for the block reward right now. At the next halving, when we go down to 12.5 sometime next year, the transaction fees may become more important to the miners. And especially if we increase to a 10 megabyte block size, because then if the transactions are available to include and you can get them in and not get caught in an orphan race, then obviously the fees would be much higher.
Okay, great. So let's go over that discussion a little bit. So of course, there is a big discussion going on about increasing the block size. And, there's pro and contra, and there's different ways of that could happen. There's the hard fork, there's, different possibilities of doing it. So could you just tell us what is up for discussion and what are the two or main proposals or pros and cons that are coming out about increasing the block size?
Sure. Well, what is up for discussion is increasing the block size, the maximum block size from 1 megabyte to 10 megabytes. And it's been proposed by Gavin Andreessen, who's Bitcoin's chief scientist is his title, and primary developer. And the proposal is essentially to schedule the fork in the next release of Bitcoin for next year. And what that does is it allows the network nodes, all the different Bitcoin nodes on the network, to slowly upgrade over time, because that fork can't happen until it's already in the majority of the nodes. Because otherwise you'll just continue to have hard forks until the majority of the nodes do update. So what Gavin's asking for is, the year worth of time to schedule the fork in the next release. And that means the fork won't actually happen, but it'll be scheduled in the code to happen at a point in the future. He's proposing a year to do that. And so his current proposal is to do to go from 1 to 10 megabytes and keep a hard fixed limit. I would say the current second, best proposal that's being most accepted by the community is to algorithmically adjust the block size based on the size of the last n blocks. So let's say the last 2,000 blocks. So what it would do would be take the size of the last 2,000 blocks, multiply that by some number, maybe 1.5 or maybe 2, and make that the dynamic maximum for the next, let's say, 2 weeks or whatever time period they decide. And dynamically scaling it, frankly, I think has some advantages. And also Gavin his most recent post was that he discovered that there may be an issue with his raising it directly to 10 because of the size of the unspent transaction pool, because it can grow very, very rapidly and it's all kept in memory. So if you look at the total number of transactions, which I'll pull up now, it's been increasing pretty linearly over time. And sometime next winter, we're going to hit that 1 megabyte limit and we'll be there permanently. And when that happens, those transactions that are in every node's memory are going to grow exponentially because they won't all be confirmed in each block. Each block will then be, the 1 megabyte, hopefully, if the miners accept that, if we don't do the upgrade. And so what will happen is the memory of all the Bitcoin nodes will start flooding with all these transactions waiting to be confirmed. And then what will happen is they'll start dropping the older transactions that haven't been confirmed, and the clients that generated those transactions will start rebroadcasting them. So what you have is both your memory being flooded and then the P2 pool or the P2P Bitcoin network also being flooded with rebroadcasts of transactions that will just build and build and build upon itself because they're not getting confirmed. And eventually you're going to have, a flooded peer-to-peer network and a flooded memory pool, and it could really potentially be disastrous and completely crash Bitcoin. It's never happened, so we don't actually know. But the speculation is that it would be very disastrous for the network, that nodes would start crashing. Bitcoin nodes don't automatically restart, so they would have to have someone come and physically intervene to restart them. And then as soon as they restarted, their transaction pools of memory would start filling up again. So that's kind of the risk. And my opinion is that it's very important to get it scheduled, yesterday. And then after it's scheduled, you have a year to kind of tweak the code and deal with the nuances of any problems that you find in the actual fork. So I don't think it's as important to determine exactly how we're going to handle it today, but I think it is very important to get that fork scheduled and get it into the next release of Bitcoin Core, so that when that time comes in a year, we're actually ready to push out a hard fork, versus waiting till the last minute when you don't have any nodes on the new software. The hard fork won't work. So to me, it's very important to get it scheduled.
Okay, so what is going to motivate? So right now, the blocks are not always full. We have some with 1,000, 2,000, 3,000, and some with 100 or 200 transactions in them. So what's going to motivate the pools to fill up the 10 megabyte blocks?
Right. I mean, I don't think we'll be anywhere near filling up a 10 megabyte block, but the question is really what's going to motivate them to increase the maximum block size that those nodes will accept. And the answer is that inherently we all do this to make money. The miners are, P2 pool miners support the network maybe a little bit more than some others, but we're all really in it to try to generate some income and have some fun mining Bitcoin. And the answer is allowing the network to crash isn't in anybody's interest who has anything to gain from mining Bitcoin. So if the network ever got to a point where, let's say, the majority of the large pool started accepting 2.5 megabyte blocks, after the update is pushed, if those 2.5 megabyte blocks aren't full, then they'll stay at that limit. But then if they do start to fill up, the network starts to slow down. It takes longer to get transactions confirmed. Having a transaction drop out of the memory pool and having to rebroadcast it is, can really shake your foundational beliefs in the fact that the Bitcoin system works, because then you're waiting, if you're waiting a week to get a transaction confirmed, it's not so good. So, it's in their own interest to include as many transactions as needs to be included to keep the network moving smoothly.
Okay, great.
Yeah, and as a side note, something I've thought about is everybody's kind of assuming that once Gavin sets this 10 megabyte limit, if that's what they do, that every node will accept 10 megabyte blocks. And that may be true. Every Bitcoin Core node will accept 10 megabyte blocks. But I almost guarantee you that no current miner will generate a 10 megabyte block because there's no reason to do it. So they will set hard caps on how many transactions they'll accept into their blocks that they're going to build and then push out to the network.
Okay, great. So can you show us some of your graphs? For example, this one, the transaction volume radar, I believe it's called, and kind of explain to us, what that means and what we can learn from it.
Yeah, this was one of my favorite ones, actually, because it kind of shows it's this crazy curve that spirals out from the beginning. So it may be hard to see on the screen share, but you can visit it on our site. So each different color represents a different year. And the colors in the very center start at 2009. And then the last line out is 2015, which is still being drawn. So the last one you can really see is 2014. And I'm trying to remember the mathematical term for it. It's I'm not going to remember it, but it's a curve that follows the exponential growth that's always seen in nature. So if you look at like a conch shell or a spider web, these are all this type of exponential curve that's almost doubling itself every year.
It's like a Fibonacci.
Fibonacci, thank you. The Fibonacci curve.
Yeah.
And that's what this really looks like to me. And this isn't a graph that was fit kind of to look like the Fibonacci curve. This was just we plugged our data into the radar chart, and that's how it came out. And it's exponential in its growth, and that will continue. There's been a lot of talk about people, faking transaction volume, quote unquote, and there really is no way to fake transaction volume. It's either a real transaction or it's not. You can certainly broadcast a lot of small value transactions to increase the number of transactions, but you're still going to pay the transaction fees to do that. So in my opinion, there really are no fake transactions confirmed in the blockchain. They're all real, they exist, and they're there. And I don't frankly believe that any organization would have the wherewithal to continue this, to continue to try to do that trend for all time or for as long as it's been going on since the beginning in 2009. But if you look at, again, the number of transactions, that was the circle chart, this would being the linear chart, it just goes up and up and up, and it will continue to do that as there is more adoption.
So we got some more charts there. So can we look at the transaction volume broken down like on a daily basis or something like that?
Well, the chart up here, or the data on this page, is broken down monthly. So you can see the exponential growth, and then we total it for each year, and you can see the growth there. In 2015, we closed with 25 million transactions, give or take a few, where in 2013, it was 19 million, and it keeps going up and up and up exponentially. So we did a linear line chart showing transactions per day, and it's exponential. It's how you'd like to see the Bitcoin value be looking right now.
Right. Yeah, well, that's what I was going to ask. I mean, the price doesn't look exactly like the transaction volume, but I was just wondering if you were able to see any correlation between movement in price volatility and, the volatility of the transaction volume.
I've not been able to make any correlation. The one exception to that is if, the known exchange addresses, if you're keeping an eye on those and you see a bunch of huge deposits coming in, then you can imagine that there's going to be some big sells coming up. But that really doesn't correlate to transaction volume directly. So we haven't actually been able to make a direct correlation between volume and price. And that's okay. Again, microtransactions become more popular and things like that. And the transaction volume will go up.
Okay, great. Yeah, I haven't been able to find a correlation either, but I just thought it's an interesting point because some people, do talk about transaction volume a lot, and increasing is good. That means there's something being done. Money is being sent. Bitcoins are being sent here and there, and that's healthy. It wouldn't be good if that were to go down dramatically. That wouldn't be a great sign. Okay, what do you have there with your volume pie chart?
Okay, so this is just transactions by year. And the red part here is 2015. This isn't currently up to date. We update it every quarter. But you can see that 43% of all the network transactions happened last year. And that's the kind of growth you're seeing. And I expect that to be the same for 2015. And we're on track to keep the pace going of almost double. So the earlier years don't even show up in the pie chart. The first year that shows up is 2011 here in orange, then 12 in green, 13 in purple, and 14 in blue. And so you can it kind of gives you an easier visualization of how, by what multiplier the transactions are increasing each year. And that, again, also leads to why we're filling up the 1 megabyte blocks.
Mm-hmm. Okay, great. Well, let's move over to your price index. Let's take a look at that. How are you really making an index, like an average of different exchanges, or how are you doing it?
It's a straight average. It's not weighted. We include indexes that trade, or excuse me, exchanges that trade in the U.S. and U.S. dollars. So right now we have 7 exchanges. We're going to probably add some of the Chinese exchanges. But again, their volume numbers are a little iffy, so we're not quite sure how to add those in. But so what the index tracks, one thing it can do is give a real easy view of arbitrage opportunities. If you're set up on multiple exchanges, this is the current price from each index. It's updated every minute. And then the average over time is here. We showed 1 day by default. And we currently have a little over a year of data. We don't go all the way back to the beginning of Bitcoin because we only display data that we collect directly and can verify, because there's some iffy Mt. Gox data out there from the beginning that we didn't really trust. But it's a good indicator of overall market direction, and it's also a great place to find arbitrage opportunities.
Okay, great. Yeah, that looks really interesting. I like the graph and the list there with the simple data. All right, well, any final words about mining, and where do you see the future of mining headed? For example, we've got a lot of people talking about mining centralization. You're talking about P2 pools, which is decentral, but in the end, it's just an arms race about who has the biggest guns, and have the biggest guns as in the biggest miners, or the biggest.
Absolutely. P2 pool, as big as we are, we're 1% of the whole network. So we're definitely not a big gun. If you talk to some of the big manufacturers and the big mining farms already, they see, mining consolidation, i.e. they call it consolidation, it's centralization, as an inevitable outcome. For example, Spondooli's Tech, which is a manufactures very high quality miners and kept all their promises and did everything right, recently just announced that inside Bitcoins in New York that they will no longer be selling their miners to the public. They've made a partnership with another company, I'm not going to recall the name of it, where they're basically going to just manufacture and mine themselves, which will create a large centralized mining pool. So they see it going towards consolidation. The other thing that tickles the back of my head about that, though, is that what the news we heard about 21 Inc. and how little we know about what they're doing. A lot of the rumors are that they're making kind of an Internet of Things Bitcoin miner, where your toaster may be mining Bitcoin in your kitchen. And that would certainly, if they do it right, it could certainly help decentralize the network. I just don't know how they'll do it until they announce it. But there is some speculation about that. So I would love to see something like that. And again, we're always out there rooting for decentralization with P2 pool.
Mm-hmm. What do you think about nodes and running a full node? How important is that for the Bitcoin network?
I think it's important. We've lost a lot of nodes in the past year. Frankly, the number of active nodes has gone way down into like the 6,000 or 7,000, I think. And like I have a node running on Cadence, we have a node running on p2pool.org, and I also keep a node running on my local computer because I have the bandwidth spare and the space in the computer to do it. So I think if you have the disk space and a high-speed connection to the internet that's not like a metered connection that you just pay a monthly fee for, then there's really no reason not to do it. And it does support the network, and it helps us keep growing.
Okay, great. So if we want to find out more information about your site, we just head over to coincadence.com. You have a Twitter too, right?
Yep, at CoinCadence on Twitter, coincadence.com. We have a Facebook group and a Google Plus, a small Google Plus contingency. And also, if you're interested in P2 pool, one of the best places to go is the Bitcoin Talk thread. It's in the mining pool section. That's P2 pool. And again, tons of great people in the community. If you're interested in mining and setting up your own P2 pool node, there's lots of people there that are happy to help you. And if you just want to try it out, you're welcome to jump on our node. It's a 0% fee. It's located in Amazon's data center in the US East Coast.
Okay, great. Well, thanks a lot for joining us today. That was Transmission 33 with Coin Cadence. Make sure to thumbs up, share, and comment on this video. Also subscribe to World Crypto Network, and see you next time. Thanks a lot.
Thank you, Theo.